Hello and welcome on this stormy January 11th, 2024 to the GoNoGo Charts show. My name is Tyler Wood. I am a CMT charter holder, and today, as always, I am joined by Alex Cole. How are you doing? Freshly trimmed gentleman you are.
I'm doing well, and our storm is just about passed. Today it's beautiful out there. Sun's shining, not too much wind, and it's a lovely winter day today.
Yeah, it's like 24 and blizzard conditions up here.
No.
Don't try to fly a small plane up to
No.
my office, Alex.
I won't.
But the storms are not just weather related. A big crypto storm with the approval by the SEC of spot Bitcoin ETFs yesterday. Lots of exciting trading opportunities, but also mad rush to collect assets amongst the big institutional players. We're going to talk at large on today's episode about the cryptocurrency space, something that GoNoGo Charts has covered since the inception, I think. But let's start as we usually do. Let's get a sense of the asset classes as a whole, how they're doing trend-wise. Alex, let's talk through this heat map across the asset classes.
Yep. So for today, we threw in the Bitcoin map at the bottom as well. You can see we've got some pretty stable trends now, Tyler, across the last several weeks. Equities in a go trend. We saw the blue come back in today, the bright blue bars this week, I should say, not today, but we've seen some more strength in equities this week. Treasury bond prices still in the go trend, but showing some weakness. We can see the aqua bars there in the second panel. Commodities still in the no-go trend, but showing pink bars, so the no-go trend weakening there. And the dollar we've been watching as well, because it seemed to have been struggling to maintain that no-go trend that it was in. We even had an amber bar at the beginning of the week, but now that's gone back to pink no-go bars. So definitely the no-go weakening for the dollar, but still the weight of the evidence suggests a no-go trend. And then the last panel, of course, is Bitcoin. We'll go into the cryptocurrencies, as you said, later on in the show, but some real movement there, some great charts to look at. Bitcoin, Ethereum, some of the others, very, very strong.
And for anybody who is new to GoNoGo Charts, if you're just coming in to watch this show, welcome. Thank you for checking this out. What we're doing is a multi-factor trend model, just like every other asset manager would do. You're looking at the weight of the evidence from multiple technical indicators combined and blended in the background. And so those charts are painting both the strength and direction of the trend. And what the colors mean is when we're in those aqua territories, it's still in a go trend, but in the weaker form of an uptrend. The strong blue bars indicate that that direction, and with a stronger trend condition. Pink and purple, the no-go conditions. Again, we're taking that nomenclature from NASA and any shuttle launch. You want to make sure that the conditions are optimal. If you're going to be go for launch, you want all of the probabilities on your side. And those amber conditions where you see in points of transition, there's neutrality. And when all of the elements of the GoNoGo blended trend model are in their neutral territory, that's when the market is telling us, and it is a signal in and of itself, there's not enough information to indicate a trend direction at all. And that neutrality is a condition that a lot of investors struggle with. Markets do chop around in sideways territory at times. So we keep an eye on those as well. So Alex, let's turn our eye to the chart of the S&P 500. Equities back in a strong go trend when we're talking about the S&P large cap index here in the US. A tremendous rally. Certainly a lot of folks concerned about the seasonality weakness around the turn of the year and what has been named the Santa Claus rally. But it seems that we have recovered and back above the zero line in that momentum oscillator. Alex, walk us through this chart. What are you seeing from a trend perspective?
Well, you just hit on the most important point there, Tyler, and that was we were watching this last week. And even though we were still able to say that the weight of the evidence tells us we were in a go trend, we were seeing this weakness, all of these aqua bars as we came off the highs, these highs highlighted by counter trend correction arrows, right? Telling us that in the short term, price may struggle to go higher. We saw that weakness then with go-no-go trend painting the aqua bars, and we watched as the oscillator dipped into negative territory. So that was where we were, and we were sort of we were mindful of whether or not that would lead to a steeper correction if it was then rejected by the zero line and was staying in negative territory. And what we were saying was we'd like to see it regain positive territory if we were to have confidence in the go trend. And that's exactly what happened. spent a bar or two at the zero line and then quickly back into positive territory as GoNoGo trend painted the stronger blue bars. And of course, when the trend is in place and the oscillator moves off zero into positive territory, we can say that momentum is surging in the direction of the underlying Go trend. And when that happens, we put a trend continuation icon on the chart, the green circle here, to tell us that we are seeing momentum in the direction of the Go trend. And of course, now we'll be looking for new highs given momentum is now lined up with the trend.
And so if our viewers feel like there's a lot going on these charts, you're not wrong. We've learned from some of the best practitioners and a lot of our portfolio management clients tend to trade around a position, adding to or trimming from positions according to what they're seeing in the interplay between momentum and trend. The same model exists in the GoNoGo oscillator, that idea of blending multiple tried and true, heavily back-tested indicators and oscillators from the momentum realm to give us a sense of those leading indicators. And so the interplay between what's happening in the price trend and what's happening in momentum readings can be really powerful for portfolio managers or individual securities traders as well. And it's that trend continuation that really gives credence to this secular bull market in the S&P 500. And Alex, as we like to do, we want to understand the weight of the evidence in this time frame, but we also want to look across time frames to get a little better context. So we step out from the daily chart to a weekly view. What a beautiful reconciliation of 2022's downtrend, bear market, back into go conditions, and even that seasonal weakness in the fall that we saw in October and coming into the year-end rally in December. Just rallying back in strong blue go trend conditions.
Yeah, and what I like here is that really sort of deep correction into those lows in October. We got into the amber territory, that uncertainty, but we didn't go into a no-go, so it quickly rebounded. That week after that was very, very strong, and since then, of course, consecutive go bars, strong blue color, and of course, new highs, right? So now we really are, like you said, this is a longer-term uptrend. We're seeing higher highs, higher lows, and now this is already a higher high, so we'll see where we go from here, but the daily and the weekly lining up now.
And if you just kind of zoom in on those last few bars on this weekly chart, one of the important things that we talk about are areas of support and resistance. And this week, here we are midday, approaching the close here on Thursday afternoon. We'll see where this week ends up. But should we close at another higher high for this week, that's closing out at all-time highs. And the important thing about all-time highs in bullish markets is that there isn't overhead supply.
Right.
We don't have investors anchoring to a particular level of resistance, and that is inherently bullish for markets to be at all-time highs. Yeah.
Yeah, absolutely. Yeah, don't let the top of the chart fool you into thinking it's resistance, right? We say that from time to time, but it couldn't be more true here.
Absolutely. Absolutely. So we'll be keeping an eye on this every week as we do on the GoNoGo show. Let's move on from equities. Let's take a look at a couple of the global macro factors that impact our equity investments. Let's go to a chart of the TNX, the 10-year Treasury yield in the U.S. A lot of speculation about the frequency and the speed at which the Fed might indeed cut rates this year. Potentially markets getting a little over their skis through that December rally. Pretty healthy consolidation and corrective activity in the first few days of the year, back into go trends. But we've also tracked that correlation with the Treasury rates, that when these are rising, that can be a headwind to risk assets and equities specifically. Alex, talk to us a little bit about what you're seeing here on this chart in strong no-go conditions and at the zero line.
Well, it looks good because, as we said on the equity chart, we wanted to see the oscillator regain positive territory. Well, we're looking at the opposite scenario here. We saw these lows a couple of weeks ago into the end of the year, and we've rallied against that. And now a lot of people were sort of worried that that was a bit of a strong rally. But really, if you look at it now, we're probably looking at a relief rally. We're looking at a lower high, right? If you compare as the trend has continued here, we're seeing this is another lower high if we've rolled over, which we seem to have done because we are painting a strong purple bar and we're getting some closes that are now lower than those highs, and the oscillator back at zero. So just like that equity chart, it did dip into the opposite side of the zero line relative to where the trend says it should have been, but we are now quickly back at zero. So if this dips again back into negative territory, we'll be able to say again, momentum in line with the underlying trend. The trend, of course, being a no-go. So we'll be watching the zero line. If we get back into negative territory, they'll be lining up on the chart of TNX as well.
Absolutely. Let's turn our eye to a chart of the U.S. dollar index. Here at GoNoGo, we like to use ETF proxies. UUP is the ticker symbol, and that gives us a sense of volume as well. So if you're not familiar with the construction of these charts, that GoNoGo oscillator in the lower panel, when it moves from the green to the dark blue, that's telling us there's heavy relative volume happening in this trading environment. So right now we're seeing average or light volume in that green line of the GoNoGo oscillator, but we're trying to blend as much information as possible into the simplest chart to avoid our analysis paralysis. Alex, walk us through this chart of the US dollar index.
Well, this one's interesting for a few reasons. One, the dipping into the positive territory that you wouldn't really expect in a no-go trend is a bit more serious than it was on the one of the Treasury rates. So we are looking at this now with some positive momentum as prices rallying off the lows. We also saw that the rally was enough to bring us into an amber bar, not just these weaker pink bars. So there's some more going on here that would suggest trouble for the no-go trend. Now, having said that, we then did quickly go back to paint pink bars. And if you look at the oscillator in the lower panel, it's on light volume. So when you see a rally in a downtrend and volume is light, then that's kind of healthy, because you want to see the heavier volume in the moves lower. So there's a lot going on here. Definitely a little bit different to what we were looking at with the TNX, but still weight of the evidence, no-go trend. We'll definitely pay attention to the oscillator though and look at what's happening with momentum.
Absolutely. And it's I think it's healthy to observe on a chart like this, and we can even bounce it out to a weekly view, that strength in the US dollar, runaway bull rallies in the US dollar index have been headwinds for equities. What we're seeing right now is not a runaway destruction of US dollar strength. It's not on the weekly chart, not even entered a no-go trend yet. But we certainly see that cooling period, that stabilization. We never made higher highs here in the October rally for the US dollar. And frankly, the stability in this chart is what a lot of investors are looking for. So important to have some context for where we're at on this currency. Let's move our eye over to gold. GLD is the ticker symbol that we like to take a look at. How many times are we going to try at these levels, Alex?
You know, I don't know what to tell you, Tyler. We keep trying.
We keep trying. Those gold bugs,
and it's failed again. So now we are seeing amber bars, go fish bars. Remember, that tells us that behind the scenes there are not enough criteria being met to determine a go trend, not enough criteria being met to determine a no-go trend either. So we're in that sort of period of indecision. Oscillator's gone back below the zero line, and if you want the confirmation or the proof of what we're talking about in terms of where we are failing, if you bounce this out to the monthly chart, where we did it again, right? We ran right up to it, and we thought last month's close was barely higher than any of the other closes, but not ultimate high, because we've got these higher notches in here. But again, same levels, same problems, same resistance, clearly the same overhead supply coming in, the same people selling at these levels. And it's going to be very, very difficult. But of course, if we do significantly break above, then that will be exciting for all the gold bugs. But it's going to be very, very difficult. What is encouraging is that every time we come up to these levels and pull back, in the past, we've come up to these levels and we've struggled around the zero line. Well, we're not even close to zero at the moment. This is sort of a little bit new. We're in positive territory. We're at 3, and so we've got some room above the zero line. So if we correct lower this time, we'll look for support at 0, which was different here. But yes, how strong that resistance is becoming is quite remarkable.
Absolutely. And hopefully all of our viewers are writing down, this is a monthly chart, not a daily, not a weekly, not an intraday. Those are monthly bars. And so we'll see how January shakes out. But the other thing that pops out to me, Alex, in just kind of a classical technical viewpoint, each time we have run up against those highs and see that pullback, it's to higher lows, right? So the deeper correction over that decade-long basing pattern brought gold to much lower lows than we saw in these last three retracements.
Absolutely.
And then because technical analysis is fractal, if we jump back to that daily chart, we can see kind of the same activity happening, where we can visualize what's happening with traders and investors here. Every time we have pulled back, we're pulling back to higher lows. So certainly more and more enthusiastic buying in at higher levels as gold continues to retest that $2,000 an ounce level, which seems to be the all-important resistance area. Excellent. Well, let's turn our eye away from gold. Let's check in on some other commodities. In the industrial side, let's take a look at oil. USO is our ticker symbol for US oil. Wow, look at that squeeze.
Yeah.
Let's talk about that, Alex.
We're always looking for areas of reduced volatility like this, because we know that from those areas or those periods of reduced volatility can come periods of higher volatility. So this is an exciting moment. We talked to a lot of people that thought this was the ultimate low for oil back in the beginnings of December. Well, we are still making lower highs. So not entirely sure that the no-go trend is about to turn into anything more positive. We are seeing some higher lows, some lower highs, but higher lows. You could call that some sort of triangle coiling pattern. But it's all going to ultimately be determined by in which direction we come out of this go-no-go squeeze. If we go back into negative territory, then price will mount an attack on these prior lows. If we can jump out of this squeeze, break out of it into positive territory, we may well see a high for the first time. So we're like we always say, we don't predict, we try to react responsibly. So we're going to be watching the max squeeze and see in which direction it's broken.
Absolutely, and I think that that commodities element of the asset class heat map is very telling, right? We haven't seen commodities start to rally. It's still a condition of stocks over rocks. We see investors allocating broadly to more growth-oriented names and to risk assets in the equity space rather than the commodities play that was so popular in 2022. But we'll keep an eye on this every week with you just to make sure that we all understand where we are at and what context we're trading in. So, Alex, let's move back to equities. We've taken a look at some of these macro factors that are influencing our equity space, but let's get under the hood of the S&P 500. We'll pull up our sector rel map. And when we look at GoNoGo charts, we want to understand the absolute trends, but we also rely very heavily on relative strength trends. All we're doing with a relative ratio chart is dividing one security by the other. When we look at it on this heat map, in this view, we're looking at each of the 11 sector spider ETFs against the benchmark index, the S&P 500. And what we want to see is where leadership and laggards are within the sector allocation mix. This map has changed deeply here as we entered 2024. So let's run it down from the top. We've seen information technology roll over into no-go trends. A little strength again there this week, now in weaker no-go, right? Moving from that strong purple to a light pink. Same thing with the consumer discretionary sector in that weak no-go trend relative to the S&P 500. And it's important to remember when you're looking at a relative ratio chart, it doesn't mean that those sectors are in absolute downtrends. But from an investor standpoint, if we want to look for areas to express a thesis, to get long, to find idea generation to the upside, we're going to look for those strongest groups, those leaders of the space. Third panel, we've got is that consumer discretionary? My eyes are failing me.
It is, yeah. No, the third panel is communications, yeah. Second one is discretionary.
So we saw, long drawdown of underperformance from the communications sector against the S&P, and that has returned to a go trend, outpacing a rising S&P 500 that's breaking out. In the fourth panel, we've got energy. And Alex, I'll let you continue to call these out because you probably got it a little larger on your screen.
Yeah, no problem. So energy's in a strong no-go. And then you go down. These are the ones that we've been looking at lately. Financials still holding on to a go trend. But industrials and materials both struggling, right? So industrials, we're seeing a go fish bar. Materials have rolled over into no-go. So we were talking about how these were coming back into rotation and sort of starting to deliver outperformance relative to the benchmark index, but they've faltered this week. Healthcare, we've been putting out some ideas daily on some strong stocks in healthcare. We've talked about biotech being relative outperformers within that sector. So healthcare now strengthening to strong blue bars for the whole week. So that is an area where we're seeing some persistent relative outperformance. And then, of course, staples and utilities, the defensive sector, still underperforming. So that's been the case now for a while. And then real estate in the bottom panel, of course, has been in a go trend, relatively speaking, for a while too.
Absolutely. Why don't we take a look real quick at just a traditional GoNoGo chart of the XLV, the healthcare sector, and we can look at it on an absolute basis first, and then we'll just look at that ratio of healthcare to the S&P to get a little better sense of what we're doing with these ratio charts when we're looking at the sector groups.
Yep. So this is the healthcare chart, and you can see I think what was important, the way you phrased it there for everybody listening, was outpacing a strong performing S&P, right? So that's relative outperformance. So the S&P, we saw it. It was in an uptrend, and then it had corrected a little bit, and then it was going back and painting strong blue bars again. But look at this. This is outpacing that performance of the S&P, and you can see, therefore, why it's in a relative blue go trend on that map. So you can see very, very strong performance. Oscillator being supported at the zero line, as you'd expect, ever since it broke out of this max go-no-go squeeze. So this is the XLV, and if you want me to then put in XLV
It's
relative...
relative to the S&P, but last thing I would point out to our viewers is that at overbought momentum readings, right, we're at a 5 on the GoNoGo oscillator. Now we've seen volume pick up. So the trend was in place, momentum resurged in the direction of the trend, and now investors are paying attention, and we're seeing greater asset flows into this XLV and higher volume trades as it is breaking to even new highs. So now let's take a look at that relative chart of XLV to the S&P.
Yeah, and so this is it. It's relatively recent outperformance. You can see that basing pattern, healthcare finding support at these lows, oscillator breaking above zero, which of course was the first of the bullish signs in this ratio. And then now look, that new go trend strengthening to strong blue bars. So on that recent basis, we're getting some strong outperformance healthcare relative to the S&P now for almost a couple of weeks.
Absolutely. And so that's the part of our process is looking at the relative strength between asset classes, between currency groups, and also the sectors and industry groups of our equities market to help us identify where there are go trends or no-go trends that we want to pay attention to. But as promised, I know we're running a little short of time. The big headline news this week, some regulatory oversight that all cryptocurrency participants were waiting for, eagerly anticipating from the SEC. Alex, let's just turn our eye to a chart of Bitcoin, the BTCUSD ratio. And I think that there's a great story for Bitcoin, but the story is much bigger than just one single cryptocurrency. Let's talk a little bit about what we're seeing from a trend perspective here.
Yeah, I mean, it's been a great chart. Bitcoin now, since it solidified the go trend back in September of last year. Look at how the oscillators found repeated support at that zero line. So remember, that's really what we're looking for when we identify a new trend. We want then to see momentum surging and then coming back and finding support at zero. We don't want excessive selling. We don't want any oversold conditions when we're looking for a healthy trend. And you can see how that's continued to be the case. Bitcoin has surged, moved sideways, and then we look to the oscillator to see if it finds support. When it does, we get those go trend continuation icons. As you know, Tyler, I love to see clustering of these continuation icons as price really sort of builds some support here. And then, of course, we get another move followed by sideways movement. Again, we go to the oscillator. We look to see if it finds support. It does. We see some more trend continuation icons. And now, again, heavy volume as we see the price move again to new highs. So a very strong looking chart of Bitcoin. And as you said, it's not just Bitcoin. You're seeing that across several of the cryptos.
Let's take a look at this intraday, because remember, cryptocurrencies trade 24/7, and a day's worth of price action in a cryptocurrency is probably similar to a week. Let's look at a 39-minute bar,
39.
just to give ourselves a little. Oh, we can't. Never mind. Let's take a look at a 30-minute bar, just so we can see intraday activity since the announcement from Gary Gensler at the SEC. and the approval of the spot Bitcoin ETFs and that mad race from all the asset managers to launch lower and lower fee ETFs.
Yeah. I mean, and I think what's important to note is the jump here, and you can see that the market was trying to take off and trying to sort of wait for these announcements and see in which direction to go. And it was interesting to see the actual ETFs come into play today, Tyler. I think what was I think it was IBIT, right? Was the ticker for the iShares Bitcoin Trust. And if you look at that, and obviously you've only had 1 day's training, so you have to sort of break it down to a shorter bar. You can see how they opened and they sunk, right? With all of this excitement. And you can see how that no-go trend just really took away quite a lot of the value. And then it tried to get into a go trend, but it struggled again. So, we're going to need some time to see how it plays out here. The cryptocurrencies themselves showing a lot of strength, but then this most recent trading over the last couple of days really struggling to find direction.
Absolutely, and these are brand new launched products.
Yeah.
The other chart that I want to look at here in conclusion today, Alex, is just a chart of the cryptocurrencies relative to the S&P 500. So when we have those rel map conditions, we can see relative performance of the cryptocurrencies by market cap against the S&P 500. Let's take IBIT out of the top panel. We'll just put S&P. And that way we'll see a little more historical data. There we go.
So you can, outperformance really across cryptocurrencies. The last one we got here is Ripple. We know Ripple trades a little differently. So Ripple is in a no-go trend, relatively speaking. But you've got Bitcoin, you've got Ethereum, you've got Cardano, right? And you're seeing that sort of strength across the board in the cryptocurrencies relative to the S&P.
Absolutely. If we had a little more time, we could dive into a few more of the cryptocurrency related tickers, and we'll be sure to include a few in the show notes for you all. But appreciate you checking out the GoNoGo show each week here on StockCharts TV. If you have any questions for Alex and I, please shoot us a note, info@GoNoGoCharts.com. You can check out a lot more information, educational resources, and even our weekly subscription research on GoNoGoCharts.com. So until next week, we wish you all well, and we'll talk to you again real soon.